The budget expectations in this year's budget is in the context of the pandemic, which is there, and of course, the pandemic would influence the provisions or the announcements that we are likely to see in the budget. On the indirect tax side, the collections of the government have been quite robust. If we look at GST collections, they have been over 1 lakh and pretty much meeting the target. Customs collections on the revenue front have also been significantly high. The Indian exports are at a record high with $400 billion of merchandise exports expected in this fiscal. Again, backed by a very strong $250 billion of service exports. Given this, the government's revenue position seems to be good on the indirect tax side. What are the changes that we are looking on the indirect tax side? Let's look at first the GST changes. As you are aware, as far as GST is concerned, the government is not in a position to make any rate changes, as that falls within the realm of the GST Council. That said, there are significant changes on the policy front which the industry is expecting in this budget. What are those changes? A couple of those changes really relate to unlocking the input tax credit, which is being stuck in certain areas so far as the industry is concerned. As you are aware, you are required to take GST registration in multiple states. Now, it's possible that in one state, a particular business has a lot of extra input credit accumulated, while in another state, it has to pay in cash. Clearly, in case it was a one common pool, at least for CGST, there would have been significant unlocking of working capital, which is happening today, which is resulting today in cash payouts by the industry. Similarly, there could be certain restrictions on the input tax credit, particularly in case of Section 17(5), where we find that in the pandemic year, where employees are working from home, there is a significant expenditure on employees, on their transportation, conveyance, insurance. All these input tax credit is subject to a restriction. It is high time that this restriction is done away with, and input tax credit in respect of expenditures done over employees is also available as a credit to business. Similarly, in the pandemic year, the warehousing has become a very important activity, considering logistics play a very important role. In this respect, as we are aware, there is a restriction on construction activity, on which, in case expenditure is done, input tax credit is not available. It would be good for industry in case input tax credit, at least on expenditures done on construction activity to build warehouses, is extended to the industry. So these are a couple of changes that one is looking at on a GST policy front.